All right, so it looks like market is up about 0.2% on the S&P and Nasdaq flat. Semis up. Russell 2000 and the banks made a move today. I know small caps and the banks and the Dow, they are lagging this year, as you can see. So it's good to see small caps and the banks making some move. Understanding the fact that year-to-date numbers right here, as you can see, Spiders 11, Nasdaq 33, Semi 42. However, the Dow number is 1%. This Russell 2000, and the banks is still negative. So you can see we still have a lot of negative numbers here, while the Nasdaq Semi really making that move to the upside. So I assume Dow, the Russell, and the banks, we might see some catching up sort of type of move, while and it's along with the S&P, I think, while the semis and Nasdaq sort of cool off a little bit. That does not mean they're gonna see a huge correction or anything like that. They could see a consolidation. You may see days like this where it's seemingly Nasdaq and semi don't move that much, but you potentially see the small caps and the banks, and sort of like the market starts to balance itself out. And I feel like that's the stage where we're in. That market is trying to balance itself. Obviously, with the Nasdaq and semi being so much up to the upside, I think S&P needs to catch up. And once the S&P catches up with the rest of the gang here, the Nasdaq and semi, I think it's a matter of time that Dow and the Russell and the banks are probably going to also catch up along with it. I reckon maybe more so they might start to really find that traction in the fall or some late fall or something like that. But until then, we may continue to see sort of this market performing this balancing act, like days like today. It's a kind of a good example of that. But anyway, as you can see, we're still hovering in that micro-term moving average here. It's just been all around that, but we have not lost that micro-term, as it's been trading, just right on it all throughout the day. So micro-term really trying to support the buyers here. But keep in mind that oscillator is in this vicinity now, but you can see the difference. Just measuring from the last 3 occasions here, so you can see going all the way to maybe late May or so. Last time when the oscillator was in this vicinity, we did retest the short-term moving average. The short-term moving average is obviously that green dotted moving average here. So again, late May, we did see when the oscillators in this level, we did see the price coming down below the micro-term and retesting the short term. Same thing happened here. As you can see, this was like a very early June, very late May. You can also see that when we did see that oscillator hitting this level, right? Price definitely already came down and retested it. Retested the short-term moving average. Again, that green dotted moving average short term. Today, however, it's quite different because we're still above the micro term while the oscillator has been resetting, right? And so we talked about the fact that we're no longer controlled and bound by the Boss Bears Command Center, that island down gap that was open previously. But now that island down gap has been filled, the Boss Bears Command Center has been dismantled. Bulls can able to hold on a little bit better, I assume, and that's what we see here, as we should be if it was any other times retesting that short-term moving average like it did here or here, but rather we're staying up above the micro term as of today. So we are actually consolidating here. It seems as of today, things can change pretty quickly in the micro term, but it looks like we're correcting through time instead of through price. So you can see as the oscillator resets, you usually see the price coming down with it. Oscillator resets, price correcting with it. Oscillators are resetting, price is not correcting with it. Price is correcting through time, which is moving sideways. This is, I think, first time we're seeing something like this. I've been analyzing this market entirety of the 2022 decline, and even all throughout earlier this year. Usually you see the oscillator rolling over, price rolls over with it pretty quickly. That's been sort of kind of the market that we've been part of. Something changed ever since the Boss Bears command center has been dismantled. That 420 level has been reclaimed. So looking at the levels here real quick, as you can see, should there be any sort of a decline tomorrow, you do want to look for 424.57, the gap area, as support, and then also that's the level coinciding with the rising resistance could potentially act. So that's sort of like a 424-ish area is going to be kind of the double support there. Again, the rising resistance that could act as a new support, and the gap area. If we do see a follow through or some sort of pop tomorrow, and if we do see this oscillator crossing back up, we may see the price finding some momentum to the upside here. So that's what we've seen last couple times. As you can see, at least several days of bullish, then we are in an uptrend in the midterm and the short term. Micro term, more like consolidation the last day or so. So the sentiment is bullish. As a benefit of the doubt goes to the buyers. So if we see any sort of pop, and if we do see any sort of a strength in that, I could see this market continues to march higher.